Robschild, no investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro, technicals, and a touch of crystal ball gazing in that very specific order. Today is Wednesday, February 5th, 2025. Today's episode begins with ADP employment coming out higher than expected at 183,000. This is not a weak number. It foretells that perhaps the unemployment report on Friday may not be weak, but that's not guaranteed. I also wanted to bring up Trump and 10-year yields. We had a significant drop in longer duration Treasury yields, and if you've been following the show, you know that that's been my expectation. I have 59% of my own portfolio in TLT related funds, 0Z and TMF. From Bloomberg.com, we have a headline here. Buffett says he and Trump are focusing on 10-year yields, not the Fed. If you remember from the inauguration when Trump said directly, we must have lower rates. A lot of market participants, including myself, were thinking, oh, this is him signaling that he wants to try to control the Fed and get Jerome Powell to force rates down. No, this is the healthy way of doing it. This is watching how is the market reacting to what I'm doing, and I want rates to be lower. And, if they're going higher, then that means, the market without the Fed, regardless of the Fed, is, deciding which way things are going to go. If the 10 years going down, it means the market is doing what I want it to do, which is to not expect inflation to continue or to get out of control. If it's going up, then, maybe I need to back off a little bit. The fact that he's using the secondary markets to determine this instead of monetary policy by the Fed is very promising for all investors. Remember, the Federal Reserve, the monetary policy of the Federal Reserve, all they control is the overnight rate. They don't control anything past that. Everything past that is priced by me, by you, by institutions, by other world governments. It has nothing to do with the Federal Reserve. So again, this is a good omen. Last major agenda item, look out for that Friday unemployment report. I may hold off on doing a show on this until Sunday. As I mentioned earlier this week, I think I'm going to change the format only because these shows tend to be better for the following day since it's after market hours. As of today, no major changes in the daily reminders. Watch Macro Update 11025 Dominoes in the Ball to hear me read through these very important items, to hear my overall macro views. Also, no significant changes to the crystal ball ratings nor the Robschild portfolio. I noticed this is now at 59% in my portfolio. And these are not always completely updated. They're rough estimates. They're fairly accurate, though. On to the charts, the SPX, the S&P 500, still just moving sideways, certainly not knocking on the 6,100 level there, which means to me this looks more like a distribution pattern than it does, a consolidation for a breakout to the upside. This is going sideways here. This is danger zone for stocks, and it should be. I mean, with the S&P 500 having such a high PE ratio, come on. Again, watch the macro show if you don't know my macro views on this already. And then TLT, my favorite place to be. What a marvelous day today was. TLT itself going up by 1.65%. However you want to draw trend lines, whether you see this as a head and shoulders, inverse head and shoulders, and then a final breakout. This is not just a breakout. This is what we call a jump over the river of that pattern. Or maybe you see these two parallel trend lines here that we've been bouncing up and down in between. The fact that we didn't have to fight at this line and then break through, whatever you look at, the fact that we jumped all the way from 88.45 to a closing of 89.91 above all of these trend lines. This is a jump over the river. This is hugely bullish. I don't even necessarily expect it to retest this line or the neckline, which it could, but the way I see, whenever I see this kind of pattern, it typically means it's going to run away actually to the upside. I'm expecting in the very immediate short term TLT to continue much higher from here. This may have to do with this news on, Buffett coming out. I mean, maybe I'm taking that headline a little too much, but it's certainly making me more confident about, caring about what the market thinks in a good, positive, healthy way, instead of trying to like control the Fed, like to actually like gauge how market participants, how financial markets are reading this. Like that's good. I like that. It helps, and it helps the bond bullish case a lot, especially. The upside down version of TLT that people like to use, the TNX. This is 10-year treasury yield. Again, with this head and shoulders top, it, jumping over these two trend lines that I had. Again, a jump like that suggests to me, at the very least, this head and shoulders top should very likely play out. And in the immediate short term, we should drop to 4.3% on the 10-year. Oil continuing lower. We fought again in this little range here. We had this big red candle on Monday. And then we have some follow through. The bears are still in control of the oil market the way that I see it here. Copper, interestingly, continuing higher. Dr. Copper with a PhD in economics. I don't know. I have no idea why it's going higher. I don't know. Who knows? Maybe somebody knows something. Also, gold continuing to march higher. I've mentioned ever since we broke out and confirmed above the double top, it looks like we're headed to 3,000, and we're marching straight there, the way I see it. Last chart of the day, MSOS Cannabis ETF. This is, if you follow the show, I have about 1% of my own portfolio in this fund, because I think the fear of this industry is way overdone. People invested in this, a lot of people invested in this are, well, I'll just say there's likely a lot of inexperienced money invested in this, selling and flipping out. Let me just explain something right here. When you go from $3.28 to $3.83 quickly, I mean, that's like penny stock kind of motion. And this is an entire index. And so, but you can expect this kind of action to happen when things are severely undervalued. And I'm going to add to this that it's kind of ironic and funny how this same phenomenon can happen when things are extremely overvalued. Because when you have PE ratios that are, 70, when a normal PE ratio is, anywhere between 7 and 20, when the price is enormously inflated, giant movements, that's why we are seeing some of these mega cap companies trade, similarly, having, 20% drops in one day of, multi-trillion dollar companies. That's happening because of it has to do with valuation. It's all to do with valuation. When things are in a normal range, anywhere from, like I'm saying, a PE ratio of 7 all the way up to 20, you're not going to get, 20% gains and drops. But when you go significantly below that, when it's enormously undervalued or enormously overvalued, you can get these ginormous moves. Just wanted to bring that little subject up. And yeah, that's all for today. That's all from me and my crystal ball. I hope you enjoyed, and thank you for watching, and see you next time. Robschild.